Walk me through the sell-off that we're seeing today. Obviously, the inflation print on Friday, a big shock to investors, coming in much higher than expected. 75 basis points. Is it on the cards this week?
We don't. Good morning, Dan. So we don't think the Fed is going to step away from what it's already signaled, which is a series of 50 basis point hikes. But certainly the arguments for 75 basis points are stronger now than they've ever been. And, you know, we've heard before from Powell how he sees Volcker as a hero. And Volcker obviously was famous for crushing inflation with punishingly high rate hikes. So, you know, the chances have definitely increased for 75 basis points. But for us, the inflation print was worrying in itself. It was the decline in consumer confidence that really hurt from the University of Michigan survey. And that's something that makes us more worried, because it makes us think that maybe the whole inflation story is starting to change and people are getting worried about runaway inflation now.
Indeed, particularly when you look at the cost of gasoline in the United States and the overall price of energy also adding to those concerns for the consumer. Altaf, if we don't see a 75 basis point hike here, perhaps sticking to the script with a 50 basis point hike, will the Fed at least admit that it got the inflation narrative wrong and signal that it needs to do more to address this serious challenge for the US economy? Because that's what markets need to hear.
Yeah, I think you're right. I think you're absolutely right. I think the Fed needs to change its story and change it quite quickly. They obviously hung on to the transitory narrative for far too long, in hindsight. And now they need to make sure that their credibility remains, you know, somewhat intact, and changing the story, reiterating how firm they're going to be about tackling inflation, talking more about QT, which should help the yield curve steepen a bit, which is desperately necessary. Those are all things that I think has to be done, and we'll see new forecasts come out as well, and they may use those as a way of signaling how they feel that they're going to have to be tighter on inflation going forwards.
What I've also found interesting is that we have rising costs, but also slowing growth, which is putting stagflation back on the agenda as a real market prospect here. Do you think that is going to be an issue? And can the Fed actually avoid a hard landing here? That is, raising rates while avoiding a recession in the United States?
Well, I mean, what we've been saying for a while is that the Fed is going to remain on its rate hiking cycle. But eventually, by which time it could be by the end of this year, you know, they're going to bump into falling growth, and they're going to have to make a very hard choice. At the moment, the market is fully convinced that the choice they're going to make is to keep inflation under control and worry less about growth. But we think when push comes to shove, there may be a softening of that sentiment from the Fed, and we may see those rate hikes start to get rowed back a bit. So there is the possibility, although it's getting a lot more distant, of avoiding a hard landing. We do expect, or you know, the probability is much more than 50% now of at least a mild, shallow technical recession at the beginning of next year. But there's also the possibility that as the Fed sees growth starting to slow towards the end of the year, they become less aggressive in the pace of their rate hikes.